I'm working to make improvements to the financial regulation bill now being debated in the Senate. For starters, I've introduced with other senators 2 amendments to bring transparency and, most importantly, accountability to the Federal Reserve. A big gap in the pending bill is that the Fed is allowed to continue making decisions with little or no accountability. During the last 2.5 years, the Fed has gone well beyond what was viewed as its historical authority without any transparency or oversight. Trillions of tax dollars have been provided to financial institutions and corporations, and the public has a right to know who has taken the money and how it's been spent. The Fed's extraordinary power outside of monetary policy should be subject to the light of day. Now, I've also introduced a separate bipartisan transparency amendment to require the Security and Exchange Commission, as well as the Commodity Futures Trading Commission, to make transparency part of their rulemaking decisions. On another issue, I've co-sponsored an amendment to protect employees of the credit rating agencies who speak up about wrongdoing. These agencies were supposed to be independent evaluators of financial companies, but overly cozy relationships with those that they were supposed to be scrutinizing contributed to our financial meltdown. So providing whistleblower protection to credit rating agency workers who now fear retaliation for speaking up is yet another way to work to help shore up public trust and prevent history from repeating itself. I work to get these same kinds of protections on the books for employees of publicly traded companies after Enron and other scandals involving corporate fraud and abuse. I'm also working to keep strong, non-political inspectors general on the job in key financial agencies to do their important independent watchdog work to protect the taxpayers' money. Overall, the regulatory reform bill on the Senate floor fails to do anything about the mortgage giants Fannie Mae and Freddie Mac, which played a very major role in the financial crisis. And I've got serious concerns about the newly created federal bureaucracy in the bill. We need to establish stronger consumer protections, but I'm hesitant to support increasing the size of government and simply ignoring the fact that regulators were asleep at the switch leading up to the 2008 financial crisis. Instead, Congress ought to work in a bipartisan way to make changes to safeguard taxpayers from having to again bail out Wall Street and pay for the irresponsible actions in the elite institutions of America's financial system. We need to make sure it's done in a way so the unelected federal bureaucracy isn't given even more power to pick winners and losers.